Good afternoon. Welcome to OptionsTender. It's Thursday, February 27th, 2025. We had NVIDIA, NVIDIA, whatever those videos, earnings last night. Turned out to be a little bit bullish overnight, and then we had a shakeout. So what happens to the market at this point? I do think, the bulls got shook out, and I do think the bears are going to get shooken out as well. Okay, so we had a sharp move going downward, but I think that's going to hold, and I think we have a bounce. Okay, so you still have a bullish setup for those who think that we're going to get all-time highs, and that's fine. We have to keep showing that because there's two sides to every trade, bulls and bears. So we're just going to go really quick through SPX down multiple time frames, and then we'll jump around on the 65 to kind of shape out what we think is happening and give you a perspective from both sides, even though I think the market's going to bounce and go lower, essentially. So we're doing this intraday at 12:23 Eastern Standard Time. If you want to get these videos intraday and all the trade alerts and Discord and all those good things for 99 cents a month, please consider becoming a member, and don't forget to like and subscribe. Here we go. We have SPX on the monthly time frame. We have 1929 top, 2000 top, 2020 25 top, 2008, 2021, and Confluence. We're getting a bearish candle so far. We have one more day left in this month, and we'll see what that candle looks like. We've rejected 4 times off of these trend lines. Let's go to the weekly. On the weekly time frame, we had a breakout from this falling megaphone type pattern. Nice large move here. We are currently, it appears, 59.65. That's the 20-week moving average. 65. We're actually under it right now. So are we breaking down? Are we breaking this trend line? It appears so at this point. So we'll have to look at a lower time frame, but again, rejecting off of the trend lines, Confluence, and not only that, but, and I added this in here on here, this correction, we had multiple targets, all right, to the upside, and finally the 200% from this correction, we rejected off. That's even more of a storyline to our bearish look here. Daily. Now on the daily, I'll start off with just a clean look. This is the game plan that I posted in the Discord. This is what we're looking for. Now, if we fall directly from this point going into tomorrow, the rest of the week, or next week, if we fall directly from this, look how clean this is. Then we're looking at a direct move to the 200 and even lower. We have that 560 on SPY, 5600 on SPX, that zone. Okay, so this is what bulls are looking for. They're looking for a 1, 2 setup into 3. Wave 4 is done, and this is a 1 into a expanded flat B, and then wave 3, 4, and 5 higher. All right, so 1, 2, 3, 4, and 5. For bears, I think we get a bounce from here, test up a little bit higher. Probably those levels that we're constantly talking about on the monthly time frame. I was saying price couldn't stay above 605 on SPY and 60.50, and that's where the 20 moving average, simple moving average is. So our trend so far is down. The momentum is pushing. The 8 EMA is pushing down. And so there certainly is a possibility that price can break down directly from here. But I think it'd make more sense if it bounced a little bit, and then we have time and price later in the middle of March for a low. All right. So here's what it looks like when put our drawings in here. That's our bounce target. where I think we get a wave 1 and a 2. But notice that we have our trend line. We're underneath the trend line. We back tested already and rejected off the 50 and the 8 EMA. So even if we do bounce, I don't think we go very far. That's kind of the moral of it. Do we poke right above it and head lower? We don't have to. And so we're ready. We're ready with our swing positions. I had to add them today because that move lower, is very deceptive. And so made sure that my swings are on. I should not have taken them off for this little bounce. Should have held on tightly to them just in case. But at this point, we're underneath the wedge. We have a sell signal. Let's see if we get a little bit of bounce higher. Going to the 65. We have that trend. We have both of the supports shown here. So we broke down from the wedge, but we're holding on to that potential channel for either a bounce or higher. All right, and digging in just a little bit more, you see we're holding again, got very low here, just constantly testing this right now. And I think I do think the resolution is going to be to the upside. And with time kind of wasting away here, I think that could be as soon as tomorrow or Monday, where we get our 60, 40 or 50 high here. Yeah, and then a breakdown from that point. So we went over, I did a video for individual analysis members on tech, and the Tesla and Google setups to the upside are just so good. I just doubted that this is going to break down at this point. I think those will be some leaders into any bounces that occur for the market. I think those will be the leaders in those bounces. Okay, and so if you're a bull, not only do you have this confluence with the possible channel, I'm going to go to the lows of the potential wave 1, and I'm going to draw a retracement tool to the top of wave 1, not to the top of the B wave, but the top of wave 1. So this entire move here, and then you have your potential A, expanded B, expanded C, and look where that goes. Directly at the options expected move, the channel low, and a 62% golden ratio support. That is a 1-2 setup. It's perfect. So why not? Why can't you be bullish? A, B, C. I'm bearish because of those historic trend lines to the upside. But if you're bullish, this is a wonderful setup here. I just think it's going to fail from the trend line, from the wedge. Okay, so I'm looking for something more like this move right here. So when price got to this point, you notice this trend line was here, back tested, went down, held, and ended up, getting through there but failing. So I that same thing could happen here. And then when you have a fail like that, it's a very extreme move. And the indicators are pretty much saying the same thing at this point. So, we're oversold here, oversold. So got that oversold. You see how you have the higher low here. I know you have a higher low here as well, but barely got into the oversold again after being deeply oversold, and then had a run up. Okay, that's just a simple ABC pattern. So in that same predicament, we're deeply oversold, and then we're just now getting into that oversold area, and I think we could spike up here for one last move before heading lower, and I would look for an overbought situation above. Okay, let's go to SPY just so you can see it. And most people trade with SPY, so that's why I put this direction. We have time and price tomorrow, so that we could have our high in as soon as tomorrow, maybe by the end of the day today. I don't know if there's gonna be news or ramp or catalyst, but definitely looking tomorrow to scale into some more puts, some more short positions. Right, because they're not all puts. I have SQQQ calls, which is the inverse of the tech market, right? All right, so QQQ, speaking of, this is the key spot for the Qs. And I'll show you on the daily. We've been talking about it on the daily. I kind of highlighted the zone. And this is where price needs to hold for this range. And I think even potentially, if we get some traction here, price can ramp back up to the top of the range at 528, okay? That's not out of the picture. And now going back to the 65, here's what it looks like. You see all these supports, resistance, support. Well, held it again. Held it another time. Even though the market's weak, it's showing potential to move here. Now, I think the 5-wave move is already in, and so I'm counting this as a 3-wave move up for an A, an expanded B that made a new low, and we should see some sort of 5-wave move to the upside. Whether that's an ending diagonal that ends up not a very high move, and that could take us to the close of last week right here, and that would be the middle of this options expected move range. So this options expected move has already been violated to the downside. It is very unusual for it to get to both sides in 1 week. All right, so I can imagine that this would be a good target here, or even just a little bit higher to test this downtrend right there. The downtrend at 528. And that takes us, 528, that takes us to a potential wave 2 top at the 62% retracement, but it doesn't have to get that high. We'll start scaling into more puts as we get to 50% here. Does it even get there? I don't know. 382. We'll see. We'll see where the rest of the we'll see where SPY is at the time, and we'll look at the other indices all at the same time, so we can kind of determine when we add on to our short positions. Again, you see this gap here. We're holding on to the gap. Same thing. I didn't show this in Qs, but it looks the same. So we have this positive divergence here, making a lower low on price, making a higher low on MACD and RSI. So, I'm going to pull back out here. This can still go straight down. Look how this cycle is ending, -4. We can cycle all the way down, previously to -7 or lower. So I'm not saying it can't fall directly from here. It's just not likely with the positive divergence forming, and with Nvidia being the weak stock with the earnings, really it could have a running flat too. SMH and Nvidia don't have to complete an expanded flat to get a higher range. It can be a 1 and then an A, B, where C maybe comes back here to the options expected move and falls from there. That could be an expanded flat there, and that would be very, very bearish. IWM. IWM did the same thing, had divergence here, just a few cents on the low, and I think it's going to have a flat pattern. Again, we'll see if it's expanded flat up here or a running flat. I think this one's more likely to have an expanded flat, and it's still just working out all of its market structure here. So you have plenty of nesting there to where, we made the high here, so we still have more market structure. 1, 2, and possibly wave 3 is done. You have wave 4 in here, and then another low there. So this can continue to move downward while maybe tech is grinds to the upside. We'll see. I think DIA is more or less done to the upside. It's already had a correction, and again today, like this expanding, probably a wave 4, and this is more like it. This is the 1, 2, 1, 2, 1, 2, 3, and did it complete some of this, and now we're on to other structures. But I think either way, we're looking for lower price from DIA. And the VIX, I'm not going to show again the full fledge of the weekly down to the daily down to the 65, but I'll just show you here. It's just having a real hard time with 19. 19 is kind of that bull bear. You can argue that it's 20 also. Either one. This zone, it's having a difficult time with staying above, and it's rejecting this zone again. So I think it is likely, it doesn't have to, it's kind of forming an equilibrium here. If we see price spike, especially getting a new high, then I think the market is heading straight down from that point and VIX is going straight up. But I think it's very likely that we could backtest just a little bit more from this initial breakout. Okay, so we could come back, and then I don't think we'll hit the options expected move to the downside, not this week at least. And then the market should go a little bit higher, and then we should see a new high in VIX after that. So that's what I have for you. We'll look into some more of the indicators and such tomorrow, and I'll add on another one of our recession indicators on the next video. All right, thanks for joining us here. Don't forget to like and subscribe. Good luck trading.